To you both. Tom, you're more, I don't want to make it sound like you have a point of view other than you're expecting a more hawkish Fed, and Barry, you're expecting one that's a little bit more dovish. So Tom, you're more in line with consensus right now. What would that look like, and why are you still bullish on stock prices?
Well, I think precisely because our clients are expecting a hawkish cut. So exactly as Steve laid out, Fed does a cut, but future cuts are uncertain, not even maybe until June. Now, because that's the base case, then if that's what happens, of course, markets have already been bracing for that, and they've been bracing over it since October. And of course, there's a chance that it's a dovish cut, which would be bullish as well. And then I think
what to you would be a dovish cut? Are there projections? Are there dots?
Yes.
There is. So we'll know right away if they come out and those projections show that they're expecting more rate cuts next year. Then you're saying we might only get one more in the summer.
That's right, and it could also be interpreted dovishly if they start acknowledging the balance of risks are shifting, so that then markets can realize the Fed is now acknowledging there's some underlying fragility of the economy. And of course now QE is, because QT is ending, it's essentially not QT, which is QE, and there's of course the chance that there's something positive the Fed has to say. So I think it is a hawkish cut, but actually I think market reaction is positive.
And there's so much more you're queuing up here we're going to get into, but on a top level, why isn't it a bigger roadblock for markets, Tom? You could look at this and just say, well, we're already basically at all-time highs. Look at the Russells and so forth. And Powell's been known to not have a very favorable reaction to his commentary, and he's only got a few meetings left, so maybe he's even more hawkish than usual. I don't know. Why don't you think that's a bigger risk? And whether it's, I'm not just myopically even talking about this afternoon, but, kind of setting the tone into year end and then into next year.
Yeah. I think part of it is just the market's now adjusted to the idea that the Fed is institutionally slightly hawkish. Now, part of it may be because that there could be undue pressure coming from outside the Fed, and the institution wants to protect its integrity, and that comes across as hawkish. But that dynamic is something the markets have been bracing for, and they've reacted negatively to it, like in October they did. And so I think because of that, that's what people are building into this December meeting, which is why it could be a surprise.
It's like when Apple always gives cautious guidance. The stock always sells off after earnings, and then it does fine again. And they also, of course, have the post-COVID period to react to, where you know that someone like Powell, who's about to leave, is going to want to say, I didn't reopen the door to inflation, right?
Yeah, that's right.
For that
Protect
institutional
his legacy.
Exactly. So do crypto prices keep going? Do you have a bullish view still on small caps if we're finally going to get that rate coming down a little bit? Where should people look for alpha or outperformance?
Like 2026 is a year like there's a new Fed, right? But a dovish tilt. And at a time when the ISM's been below 50 for a record more than 3 years. So that's really good for small caps. And as Barry says, if they deregulate banking, and we were talking about this offline, that's really good for small caps. But that's also really good for the business cycle. And we've talked about this in some of our past research. Crypto prices are really sensitive to the ISM. So the ISM moving back above 50 has historically been associated with actually super cycle moves in Bitcoin and Ethereum.
Wait, ISM going into expansion territory is positive for Bitcoin? And
correct.
And for all, interesting.
Yeah, and so if you look at ISM and Bitcoin, and you detrend Bitcoin, essentially look at its distance from the 200-day, it's almost perfectly correlated to the ISM.
Surprising.
And same thing with copper to gold prices. So copper's an industrial metal versus gold is a monetary.
Right, but all of that tells you that it's basically just risk on, that they're all behaving like an economy. And am I overcharacterizing
Yeah, I think
it?
I think that's right. I think Bitcoin's a bit of a chameleon because there'll probably be a time when it acts like gold, but right now it acts a lot more like it's sensitive to monetary policy and the business cycle, and both are about to turn up. So that would mean anybody who thinks the Bitcoin 4-year cycle means crypto prices are down next year, we're betting against that, thinking that new highs come early, like in January.
Gentlemen, thanks. Really appreciate it. And of course, we'll find out in 45 minutes what they decide. Barry Knapp and Tom Lee, thanks for coming on set today.